Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, it's Thursday, and that means it's usually weekly export sales time. But not this week because we had the Independence Day holiday on Tuesday. So that means everything from Tuesday on is, well, I should go this way, right? Is going to be shifted back one day. So we'll get the weekly export sales numbers out tomorrow. Now, on the other hand, we'll get yesterday's normal ethanol production report today. But when they shift it back a day, that means instead of at 9:30 Central Time, it'll come out at 10 o'clock Central Time this morning. Hope you got all that. There'll be a test at the end of the show. Now, we'll take a look at the overnight trading developments with a little help from Brian Hoops, and he is the president of Midwest Market Solutions. He joins us right now. Okay, kind of a topsy-turvy evening in the trade on Globex. I was watching that grain market activity and had kind of a slow start overnight, and then I checked early this morning, and corn was up, I think, 6 cents. Soybeans were up 6, I believe. The wheat was kind of split, Chicago going lower, Kansas City and Minneapolis going higher. Now, they stayed that way into the close, and the corn held on to most of its gains, but you had the soybeans just kind of falling out of bed after about 7 o'clock Central Time. I mean, you look at the chart and it just went down like that, about 10 or 15 cents in the last 15 minutes of trade. What happened there? Do you know?
You know, I think it's really dangerous to put a lot of stock in what happens in that overnight market. It's kind of a guideline, but once we get going in the day session, we kind of ignore what has happened overnight. Now, we did pull back in the soybeans, as you mentioned, right into the closing bell. I think there was some decent rains that were in some of the morning forecasts for parts of Illinois, or they did have some good rains overnight. That may have capped the rally in that soybean market. Soybeans really looking ahead into late July, August weather to, we need to have decent weather to get us to that point, but that's when we really need the rainfall to make those soybean yields. And soybeans are going to be very sensitive to any weather issues right now because they have such tight stocks already with the smaller planted acreage numbers, a little room for error in the growing season, kind of the opposite of the corn market where you have a lot of room for error now. With a couple 4 million extra corn acres being seeded, you could drop corn yields back near last year's levels or even the previous year's levels and really not affect the balance sheets in an adverse way that would send the prices sharply higher. So I don't put a lot of stock in those overnight markets. We did see big move yesterday in the wheat, specifically Kansas City. They extended those gains. That's usually an encouraging sign. We're looking at a fairly dry week ahead for most of the Midwest, except for the Southern Plains, where they're having some harvest delays, and we wanted to seed some of those second-tier soybeans, second crop soybeans, after that winter wheat harvest is completed. But harvest is behind schedule. That means planting of those soybeans will also be behind schedule.
Interesting. All right. Very perceptive. Let's take a look at what the markets did do on the close, and we'll take a little broader look here. So on the corn market with our quotes from bar chart, we finished with September 5 higher at 490 1/4, and December was up 3 3/4 this morning. By the way, on that July contract, we're in delivery mode now, right? Did we have any notices posted?
Well, for the first time, we had some corn notices, but not very heavy. But this was the first time we've seen anything. No soybeans, no meal, no Kansas City wheat, no Minneapolis wheat. There was some Chicago wheat and some bean oil. And maybe that is a little bit of the weakness that we saw in the bean oil overnight, Chicago wheat. All those markets may be absorbing some deliveries where some of these other contracts really didn't have anything to absorb and just turned higher. So, we'll see how the trade develops today. But it was a low volume overnight session. It was fairly low volume yesterday during the trade, and we really hope that the volume picks up once again, and that could lead to some short covering if that is the case, because there's not a lot of I think funds or farmers at this point in time want to sell December corn below the $5 mark.
Let's look at soybeans, and overnight, we turned lower. The August was down 3 1/4 this morning at 1465 1/2. November down a nickel. Then if you look at the wheat market in Chicago, it was very interesting. September was down 9.5 cents at 664 3/4. However, if you go to the Kansas City market, September was 7.5 higher at 853 3/4. And in Minneapolis, You had September 6 3/4 higher, finishing at 8.64 1/4, 14 cents off of its low of the overnight trade. Just real quickly, Brian, I have to ask you what happened, and I want to bring this up for everybody. What is with the oats? Look at that, September 22 higher at 434 3/4. I mean, that percentage-wise, that is the biggest mover, right?
Yes, it is. We talked about this on your radio show yesterday. They closed limit higher, which is 25 cents for oats yesterday, and we saw some follow through on that. And the percentage wise, as you mentioned, it's about a 5% move. So it's a huge move for the oat complex. That crop is harvested from Texas all the way up into Canada, and a lot of the crop, I think, is going to be similar to Minneapolis wheat this year, where it's getting drier than desired in parts of the northern plains and up into Canada. A lot of dryness that could affect the yields for these oats. So look for oats and maybe Minneapolis wheat to kind of assume a leadership role of these small grains part of the complex this year.
Kind of a dark horse competitor in the market. All right, well, Brian, we'll come back in a moment. We'll talk a little livestock action right after this. Well, we're back talking with Brian Hoops of Midwest Market Solutions. Let's talk a little livestock market action now. Okay, Brian, the cattle market kind of tripped and fell yesterday into the close, but the lean hogs acted very strong. They were flexing their muscle. What's going on with that spread?
Yeah, hog market, the spread got wider than probably historically would be normal. And so we've seen the correction in the spread between the hogs and the cattle. Hogs individually had a huge jump in pork cutouts over the 4th of July holiday and reacted to that with some strength early in the session, kind of a gap higher in many of the contracts and a lot of short covering by the end of the session. So some bullish moves there in the hog market. Cattle, kind of the opposite direction, where we have heard some talk that maybe we're going to have higher cash trade this week. But boy, those show list numbers really jump from one week to the next, telling us that there's a ample supply of cattle right now, over 238,000 head on the show list. And the futures market reacted to those jumps by closing lower Monday. And then when we came back from the holiday, we saw feeder cattle make new highs, but those highs did not last very long. And pretty soon we're seeing a lot of selling pressure come into the market, posting an outside reversal day in the feeder cattle. And you should see some follow through, I think, selling in both live and feeders on the opening here this morning, especially with the stock market being down fairly hard. Yeah,
that was quite a reversal on feeders yesterday. So we had August closing 320 lower yesterday on the feeders at 244.70. So that'll be something to watch this morning if they continue that downward spiral all of a sudden. On the live cattle market yesterday, we had August down to 187, at 174.95, within 20 cents of its low of the day. And it was off of its high of the day by about $2 yesterday. On the lean hog market, though, whole different story, and they made new highs for the move, and July is way over $100 at 101.27. Most of your action, though, is going to be in August, and it was up $3.12 at 97.45. Do you think August is going to make a run at $100 here today?
Yeah, I think it has a good chance to do that. And if we do get back to $100, I think producers need to start looking at locking some things in. It's a big rally off of our lows that we've come from earlier this summer. That's going to represent a lot of technical resistance as well, right at that $100 mark. And as a producer, if you have some hogs out there, time to lock stuff in and get some of the risk mitigated and off the table.
Good advice. Thank you, Brian, for joining us here today. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.